Welcome back. Bitcoin back above, well, briefly above 85,000 today. And now a new first-of-its-kind ETF is giving investors access to convertible corporate bonds issued by companies holding Bitcoin on their balance sheet. It's the REX Bitcoin Corporate Treasury Convertible Bond ETF, ticker BMAX. Top holdings include bonds from companies like Strategy, Mara Holdings, and RIOT Platforms. And it was developed in partnership with Strategy's Executive Chair Michael Saylor, who joins us now, along with Greg King, who is the CEO of REX Financial. Welcome to both of you. Okay, so corporate convertible debt bond ETFs exist. But this is the first one, Michael, that is for specifically companies holding Bitcoin. Is that right? Why do investors need this?
Well, but we were the largest issuer of convertible bonds last year. We're the largest issuer of convertible bonds this year. Our convertible bonds are the best performing converts, probably the best performing bonds issued in the past 5 to 10 years. And it turns out that Strategy's convertible bonds have outperformed Bitcoin over this time period since issuance. And so you get Bitcoin performance, but you get the downside protection of a bond. I think this is really critical. And this ETF is really important because retail investors could never buy these bonds, and institutional investors have a difficult time buying the bonds. So BMAX is it's plugging an important gap in the entire crypto economy because it's providing easy institutional access and retail access to all of these crypto or Bitcoin-backed convertible bonds. I think it'll be good for the investors, it'll be good for the issuers, and it'll be good for Bitcoin in general.
Could you, Michael, give us, so even for me, I've thought as I've kind of followed this all along with the convertible debt and so forth, for a while the shares were doing quite well. Obviously, lately they've been more under pressure. What is an example of how an investor could make money on this kind of strategy, you know, holding the convertible debt, versus holding Bitcoin, or versus holding your shares, or holding your shares through a leveraged position? Like, I don't know if you can give us some illustrative math.
You know, when you're holding the convertible bond, you're getting like a 70 delta instrument sometimes. So you're getting like 70% of the upside of the equity, but you've got the downside protection. And that means you might be getting all of the upside of BTC because Strategy is geared to kind of be 1.5x Bitcoin. So if you want a 1.5x roller coaster, 1.5 volatility, 100 vol, and you want to shoot for, you know, what's been 90 to 100% ARR, you take the MSTR equity. If you want straight BTC, you buy BTC or you buy a spot Bitcoin ETF, and it's like 60 vol, 60 ARR. But if you like the idea of kind of getting the upside but having downside protection, you need a company with Bitcoin on its balance sheet to sell you a convertible bond that gives you that upside warrant, but then gives you the credit protection. And that's what this convertible bond fund is all about.
Greg, are there enough investors who you think will be interested in this ETF, and enough other companies like Strategy, we mentioned a couple of them, which would make this pool of debt available?
Yeah, we think so. There's a huge demand from retail for anything that Michael Saylor's involved with, obviously, but really that's because of the underlying exposure to Bitcoin and with what's happened with the administration. I mean, it's night and day what you're hearing from not only institutions, but politicians and governments about Bitcoin. So the ecosystem is getting built out. And I think what Mr. Saylor has done at Strategy with his innovative capital structuring, he's gone on to, you know, issue preferreds and so on. The ETF ecosystem is just catching up to that. So we love this fund for two reasons. Number one is its access. And ultimately, that's what ETFs are originally about, is giving retail access to institutional strategies. And, you know, however many years we are in, 25 years into ETFs, it's unbelievable that there's still areas of the market that are pretty untouchable to the retail investor directly. This is essentially the only way to package these bonds into a portfolio for retail and even mid-sized institutions. And two, it's the instruments themselves. They have this downside protection element that Michael was talking about, as well as the upside protection, depending on the basket, of course. And when we first started talking about this idea, really, MicroStrategy, as it was called at the time, was the only issuer. But since then, you've seen other companies jump in, the Bitcoin miners and so on. So this fund will continue to evolve and keep pace with the space as it grows.
Got it. What is the expense ratio?
85 basis points.
85 basis points. So, Michael, I guess one concern would be, is the ETF strategy sort of capping the upside? If the whole idea of kind of being involved in some of these instruments is to take advantage of this big possible upside, wouldn't this bond possibly limit that, especially if the bonds were called back by strategy or others?
Well, as I said before, our converts are actually outperforming Bitcoin with downside protection. And because it's impossible for most retail investors and a lot of institutions to buy this, the market's inefficient. And so we expect the convertible bond market to grow dramatically because of this ETF. And it should be good for the bond investors because their bonds are undervalued. They'll be fully valued. It should be good for the convertible bond market. It should make it possible for other Bitcoin treasury companies to issue more convertible bonds. And of course, as you know, the more capital we raise via this mechanism, the more Bitcoin we buy,
right,
and more intelligent leverage we get. So it's good for our equity, it's good for Bitcoin, and it's good for investors. So I think it's a win-win-win.
It's certainly a lot of financial innovation with crypto now firmly ensconced in the financial universe. Gentlemen, thanks. Appreciate you joining us to explain today. Michael Saylor and Greg King.